Hello everybody and welcome to a lesson on risk and money management. First of all, I want to thank you for joining our currency training team. To profit most from our videos, we recommend you to subscribe our YouTube channel to get notified about weekly forecast videos, educational videos like this one and many other videos. Besides subscribing, don't forget to click on that bell and activate the notifications so you get instant information when a new video is online. So let's start. First of all, we have to be aware that risk and money management is a vital thing. You need risk management to avoid blowing your account within seconds, minutes, or even when it lasts longer, a couple of weeks. What you have to be aware of: when you lose 50% on your account, you need to make 100% on the money you have left to even only make up the loss. And then you haven't even made any profit so far. So this tells us the most important is to avoid losses. And by avoiding losses, we also want to avoid the massive drawdowns. We don't want our account to crush a little at any time. We want to go for consistency and steady profit. So now I want to tell you what risk management should look like and how I practice it for myself. So the less experience you have in trading, the lower risk you should take. When you are more experienced and you are more familiar with the market and you know what the market will do next, and you got an edge entry, you can slightly increase the risk. But you have to be aware of the risk you are taking depends on the setup. Whether the setup is a very good one or whether the setup isn't a very good one. So the better the setup is, the more risk you can take on this trade and the bigger the reward will be. And if it is a bad setup, you decrease the risk. So in case the trade goes against you, you don't lose too much. So avoiding bad setups is one thing to profit from money management. So what risk should you take on the markets? Well, if you ask a couple of traders, everybody will tell you a different thing. But what I do is to take a risk between somehow 0.5% and 2% on a typical trade. If I spot a setup that is really awesome and it is like nearly 100%, but be aware of there is no 100%. But it feels like this setup could work 100%. Then you can increase the risk a little so you get bigger profits. But for this one, when you increase the risk, you have to go for a tighter stop loss and the position, the trade, has to move in your favor immediately. There is no tolerance against you. So if you are taking a little bigger risk, the trade has to work from the beginning. This is why it is vital to adapt the risk on the trade setup. So let's see how we can calculate the risk we want to take. We want to assume we have a $1,000 account and we want to take a risk of 2% on a trade on Euro-US dollar. The current price is around the 110.50 area and our stop loss distance will be around 10 pips. So we got a very good entry and so we took only 10 pips as a stop loss. So first of all, if you are already familiar with risk management and money management, you can calculate what size you would enter this trade. If you need another help, here are a couple of answers which you can choose. So if you want to try this for your own, just pause the video and go for the question and calculate it. And if you have no clue on how to do that, I will explain you now. First of all, the right answer is 0.2 lot. And now I want to explain you why this is the right size. So when you want to risk 2% on a 1K account, you want to risk $20. This is 2% of the account. So 0.1 lot has an average value of about $1 per pip. So with 0.2 lot, you have a value per pip of around $2. So, and when the stop loss is about 10 pips and 1 pip is worth $2, you lose $20 when the market moves 10 pips against you. So as you can see, it is vital to trade safe. You always have to manage your risk and you don't want to over leverage your account because this is way too risky. So you also have to be aware of that you don't risk too much of the account on a single currency pair or even on a single currency itself. And always keep in mind, the key to success is the long-term consistency, risk and money management and discipline. So I hope I could give you a good insight into risk and money management. And thanks for watching. Don't forget to subscribe. See you next time.